Sometimes a breakout can be super strong that even it has the second and third leg, but in the end, it doesn't go back too much to test the previous pullback or even the previous breakout point. Instead, it develops into no range, or the range is flat. So this is a super strong breakout, and you can expect that the characteristic is the second leg here and the third leg are both very strong, and at the same time, the first pullback and the second pullback are very shallow. Let's have a look at this example. In the very beginning, there are two consecutive bull bars breaking out. The first bar is huge, and then the second bar, even though it is not as huge as the first bull bar, but the body accounts over 60% of the candlestick. That means still pressure to the upside. And now we have the first pullback here. Three consecutive bars. The first bar is a doji bar with a big tail at the top, and the second bar is a bear bar. The body is super small. And then the third bar is another doji bar. These three bars forms the pullback, which means a very shallow pullback, and the strength of the upside is still there. Which means this is a big confirmation of the upside pressure is still very strong. And then we goes for the second leg here. The second leg goes almost the same distance as the first leg. That means the market is still very strong to the upside. And then here comes another pullback. The pullback with a bear bar, even though the body seems to be big, like 50% of the candlestick, but the next bar is a bull bar. So reverse the bear right away. That means this pullback is also very weak. And then let's have a look at the third leg here. This leg, we see bull bars and bear bars, bull bars and bear bars alternatively. But this is a very tight channel. Tight channel means very strong trend. So even the third leg here confirms the trend is still very strong. So based on the pullback is weak here, and as well as the legs here are strong, we can see that this uptrend is very, very strong. And then in the end, see what? The market, instead of going down to test the previous pullback here, or even going down further, it doesn't go down much, and then you can see it develop into the flat range here, or even we can call it no range. For the strong trend, how do we trade? Theoretically, if the trend is super strong, you can enter anywhere to take the profit. However, if traditionally we trade the pullback, this is the very good signal bar after the pullback, because the body accounts 60% of the candlestick. It's leaning towards the upside. And if we wait for the second leg to finish, here's another signal bar. The same thing, it's leaning toward the upside. And then after that, it develops into a tight channel here. And for the exit, you want to measure from the bottom of the first leg and then measure up to see 2 times from here. So you can take the profit roughly when it pulls back again here. Let's do a comparison of the breakout and how it develops into the ranges. For the first bar here, we can see there's a very big strong breakout here. However, the second leg, third leg are weakened, and the pullback is huge. So that's why it goes back down to test the first breakout bar here. So it develops into a kind of a wide range. But for the second one, we can see that the first breakout, second leg, and then third leg, it's very strong because there's no obvious pullback for the first leg here, and then the pullback for the second leg is very shallow. That's why it comes down to test the pullback for the second leg here, but it didn't go down much further. For the third one here, you can see that even though we do have the pullback, obvious pullback here, but all the 3 legs are super strong legs, and then that's why it doesn't come down too much. And between the narrow range here and the no range here, what's the difference? This narrow range always happens in the Forex and the futures, but for the no range here, it normally happens with the index futures.